Uh, Hello everyone. So today I want us to do some revision on financial accounting. So this financial accounting may be for CAMS, ATD1, artisan, certificate, and diploma, that is NEC. So the revision of today is going to start at the life cycle of accounting or financial accounting. The life cycle of financial accounting. And you know, normally that businesses normally do the transactions and the transaction has to be recorded. So just know that all transactions of the business has to be recorded in the books of the business, in the books. So that at the end of the period, you know how your business is doing. And when you're trying to always doing the transaction, the first transaction has to be journalized. That is always the first transaction. First transactions make journal entries. Always, that is the first transaction of the business, always make the journal entries. Second transaction, posting transactions. Posting transactions into ledgers. Posting transactions into the ledgers. That means that's where you can now make your double entry. Then the third transaction, that means you have to prepare the trial balance. So that you know that how much the closing balance is at the end of the period in each ledger account. So the fourth transaction, now you have to prepare the final accounts. And the final accounts normally now have the income statement, that is the trading profit and loss account, the income statement, and statement of financial position. So always in the life cycle of a business, when you're doing the financial accounting, that is the step that you're supposed to follow. First, make the journal entries on those transactions as the way they are coming into your business. Then the second transaction, post them into the ledger's accounts. So every transaction has to be deposited into its ledger account so that you know how much is in that account. Then now at the end of the ledger's account, now you can prepare the trial balance. After preparing the trial balance so that you know how much is the value of your assets, expenses, incomes, capital, and liabilities on different sides. And now you transfer whatever is in the trial balance to the final accounts so that you know, did the business make a profit during the year or a loss? That one will become into the income statement. And you know the position of your assets and liabilities in the statement of financial position. So if you check ATD, so ATD, that is August 2023, question 40. The question was asked, and this is how the question was asked so that a student can be able to answer it. So it will say that which of the following highlights the correct order, of the stages, in the accounting cycle. So you're given the choices that A was saying that generalizing, comma, final accounts, comma, posting to ledgers, and the last one is trial balance. So automatically, a good student already has identified that that choice is wrong because you cannot end with the trial balance. You always end with the final accounts. Then B was saying generalizing, comma, posting to the ledger, comma, trial balance, and the last one is final accounts. Then the C was saying posting to the ledgers, trial balance, final accounts, and generalizing. Then the last one, that is choice D. The choice D was saying posting to the ledger, comma, generalizing, comma, final accounts, and the last one, trial balance. So that was the question for August 2023, question 40 for this we did going to do ATD. And nowadays know that the ATD is coming in form of questions with multiple choices. So you do the question, you have to understand what you are doing. And now you can check the answer based on whatever that you have done up there, the highlights that I said, that always a business, the first transaction must be the journal entries. Then after making the journal entries, now you post the transaction into the ledgers. Then you prepare the trial balance. Then the final one is the final accounts. So the correct answer, according to that one, is choice B, generalizing, posting to ledgers, trial balance, and the final accounts. So this was the choice that you're supposed to go with. So that one was the answer. Generalizing, posting to the ledger, then the trial balance, and you make the final accounts. So that is how the life cycle of a business always starts until you make the final accounts at the end of the year and you know the position of your business. So after that one now, because of generalizing, so now I want to start about now another thing, again, at the revision. So the revision again is now, we talk about the prime books. So the prime books, you can also call them books of original entries. Books of original entries. You can call them journal books. You can call them day books. So as a good student, once you know that the business always makes sales and buy the stock, you make sales to your customers, you buy stock from your suppliers. So this is how you can make sales. So make sales can be make sales in two times. The firm can make sales. The first one is on cash. That means the customer buy, pay, and goes. The second one, that means you can make on credit. That means the customer buys and will pay later. Again, you can make purchases. That means you're buying the stock. And the purchases can also be on cash. At the same time, purchases can be on credit. You buy on credit, you pay later. So all these transactions has to be recorded into the books. So it will depend what kind of the books. So I want to talk about the prime books. That means anytime you are making sales or purchases on credit, you have to record them what? You record in prime books. So that means anything that you are buying or selling on credit, that means they have information. That information should be recorded on the prime books. So that means you concentrate on whatever is here on credit. So we look things on credit, not on cash basis. So any information on credit has to be recorded into the prime books. And a good student must know what are these types of the what of the prime books. That is the next thing that you're supposed to know. The types of prime books and how you can record things on them. So the types of the prime books, that is the sales journal, or sometimes you can call it sales day book. We have the purchases journal, or purchases day book. We can have return inwards journal, or return inwards day book. Then you can have return outwards journal, or return outwards day book. So those are the books that we normally have. So anytime it's clear that there is a credit, there is a sales journal, that means you are selling. So that means this one equal all credit sales. All credit sales. So that at the end of the day, you know which customer you sold goods on credit and on which date, and how much that customer is owing you. You have to go to that journal books. It is the sales day book. Then if you're buying on credit, you have to know the information of your creditors. That means this is a what? All credit what? Credit purchases. So at the end of the day, you know all the value of your creditors. And this one is now sales returns back to the business. Sales returns by customers. So some customers may return back books, maybe of some reasons. Then this one now purchases returns. You're returning some purchases back to your suppliers. To creditors. So once you know that information, now you have to know how do you record all those information. Sales journal, credit sales. Purchases journal, credit purchases. Return inwards, journal in that amount. So if you go to ATD again, ATD1, August 2023, question 4. So the question asked this way: John Welle a customer, return some goods, back to Kimbo Traders. Back to Kimbo Traders. Worth shillings 88,900. Well, actually 70,000, not 80, 70,000. Full stop. Then the question says, What is the correct? What is the correct? Source document. Source documents to record the transaction. To record the transaction. So that is how the question was asked. And you're given multiple choices to choose. So the first one is sales invoice. Then B, debit note. Then C, credit note. Credit note. And D was saying cash book. The D was saying the cash book. So that question, that means it's trying to explain to you two things: the journals that are coming from the source documents. The journals that are always coming from the source documents. So that means, first of all, you have to know what are the source documents, because whatever you're recording to the journals are coming from the source documents. The source document is just the invoices. Anytime that a customer has come to your business for the first time, you have to issue that invoice based on whatever that you are selling or buying. So that means we have the sales invoice, invoices, and these one normally record sales, whether it is on cash or on credit. Then you have purchases invoices. This one is always for purchases. Then the customer may return some goods back to the business, and now the business has to issue the credit note to the customer because of the goods return. So these are return inwards. That means the customer is returning them, and always they are resales. Then you have the debit note. So the debit note is issued by the supplier to the firm. Maybe the firm returns some goods back to the supplier. So we call them return outwards. So in that explanation, automatically you have your answer. So these are the source documents, and you have to know them in their content. Sometimes you can be asked the content of the sales invoices. So you can do that revision while you're doing your learning. So the generally a customer return. The term here is the customer. So once you hear the customer is returning back the goods based on whatever you say up there, that means it is a return inwards, and the return inwards go to the credit note. So the correct answer to that one is choice C. That is how you can answer that question. Then if you go to question number 42, still ATD. So ATD1, question 42 of August 2023. Then you see how the question says. So the question says that which of the following which of the following is not a book of original entry? Which of the following is not the book of original entry? So you're given multiple choices to choose. So A, they say the cash book. B says sales day book. C says return outwards journal. And the D says the D say purchases ledger. Purchases ledger. So remember the original entry, that means you record the journal entries for the first time into the business. That means the transaction should not be transferred from a transaction which was recorded earlier. So if you see my cash book, a cash book can record a transaction for the first time based on the check that you are receiving. Sales day book also again can record the transaction for the first time from the sales that you are making on credit. Return outwards because of the debit note also, you can record it for the first time. Purchases ledger is coming always after the journalizing. Remember the life cycle of the business, the ledger's account. Purchases ledger, that means they are coming from the purchases day book, is when they can go to the purchases ledger. So this is not the original one. So the first three are original one. Now this one is not the original one because it weights the information that is coming from the purchases day book. So that is not a book of original entry based on the life cycle of F transactions. So some questions, so this is just, it's not, but because of the revision, I can just try to do it so that it can show you how you can prepare the sales day book, the purchases day book. So question for your revision, so that at least you know. So the following transactions were obtained from the books of X Limited for the month of January 2023. So the first one says that sold goods on credit. So first, sold goods on credit. Shillings, 180,000 to Bora Limited. Then the next one says that second, what goods? Worth shillings, 120,000 from Jawaba Traders on credit. Then the next one, say fifth, goods of shillings. Goods of shillings, 80,000 were bought on credit, from Lakers Limited. From Lakers Limited. Then on 7th, say Bora Limited returns goods of shillings, 30,000 to the farm. Then 10th, sold goods. Sold goods amounting to shillings, 200,000 on credit. On credit to Kasuku, to Mr. Kasuku. Then 12th, the firm returns goods of shillings, 10,000 to Jawabu Traders. So the question say that record the above transactions into day books. So remember, this is now the first transaction that the business is making. By making them on credit, returning them back. So the first thing you identify is sold goods. Is it on credit? Yes. Which customer? Bora. So that means that is our sales day book. Bought goods on credit? Yes. Jawabu, so you have the supplier. You have to record that information. You have to give information. Then goods, that one were bought on credit. This is also another purchases. Bora, this is the return. Sold is also selling. So you can start preparing the first one, that is the sales day book. Sales day book or the sales journal. Account. So always, if you're keeping the transaction of the business, remember you want to know at the end of the day what happened on which day. So every transaction must be recorded on that period based on the day it happened. So you have to have the date, then the details of the things which happened on that day. Then you can have something called the folio. Then you can have the amount. So that is always the format that you're supposed to follow when preparing those things. So which dates have the credit sales? So first we have a credit sales and the name of the customer is Bora and the amount is 180,000. So that if I come to my books, I know that on first day, I make some credit sales to Bora. So this one normally have something called the SL to means it either which account is going to, that is the sales ledger. The next transaction will go there. The amount is 180. So automatically in your books, you'll know that on this day, this customer is owing me 180,000. The next sales on credits on 10th. And the goods that we're selling to is Mr. Kasuku. The next transaction will be posted into the sales ledger account. And the amount we are selling on credit to Kasuku is 200,000. So there is no anything remaining so that I can get how much is my total creditors, debtors. So this amount is inclusive of all your debtors. So that means it has supposed to go to the general ledger of your debtors. So the general ledger is called the trade receivables. That means that is the total value of your debtors, trade receivables. And nowadays, sometimes we normally call them the debtors. The people who owe you, their total value is that one. So in the total value of 380, if I go to the trade receivables, I will see 380. But I will be not able to know which customer is owing me how much. So for me to know which customer is owing me how much, I come back to the sales day book. I know that Bora is owing me 180 from the value of 380. So the SL just means sales ledger. The GL means we may generalize all, you have generalized all your customer debtors. So we call the general ledger. The general ledger. So that one already you have prepared your sales day book based on the credit sales. So the next one, we can prepare purchases day book. So I can still have this one. The only thing just to change the name. So I have it purchases day book. I remember the purchases day book, you say things that you are buying on credit from your suppliers. So you go back to the question and try to see which date did you bought goods on credit and from which customer and amount is how much. So second, you bought goods on credit, 120 from Jawabu. So we have one creditor on second, Jawabu. So purchases, because remember in that question, we said that purchases ledger is not original entry because it has to wait something that is coming from the purchases day book. So that is the PL to mean purchases ledger. The amount was 120. Then again, you go back and try to see which do you have any creditors again on another day. That is date 5th. The firm also bought goods of 80,000 from Lakers on credit. So 5th, there is a credit purchase is coming from Lakers. This is also will be go to the purchases ledger and it is 80. Then the next one, I don't see. So for me to get the total general of my creditors, that I can auto sum them. So this one will go to the general of your credit. So this one become the total value of your creditors. Or you can call them trade payables. You have to pay them later. So the total value of the trade payables is 200, but in that total value, you have to know which supplier I'm owing this amount. You come back to your original book, purchases day book. You know that Lakers is owing me 80,000 out of 200, 20,000 I'm seeing in my trade payables account. Then after that one, you can try to see which information is remaining. So the information remaining here is on 7th, borrower is returning some goods back to the business. And you have to identify who is the borrower. Is it a customer or a creditor? So you can trace from the first one, that means this person is a customer. So the return inwards are coming in. The amount is returning on the 7th is 30,000. So those are the return inwards journal. So the return inwards, those are just the sales that are coming back. So they have the information of the sales ledger. So you can call them return inwards daybook. So these return inwards are coming back on date 7th. The customer returning them is borrower. That means they still go to the sales ledger and the amount was 30,000. It is only a one transaction and that transaction will be there in the return inwards account. Then the next transaction I'm having here is day 12. The firm returned goods worth 10,000 to Jawabu. So Jawabu was a supplier. So if you're returning, that is the return outwards. So this is a return outwards daybook because we're returning back, return outwards daybook. So the day is 12. The firm is returning back to Jawabu. So purchases, this one go with the purchases, and the amount is it 10,000? So that is how you can prepare your day books when you are buying on credit, selling on credit, returning goods back to your supplier, and the customer returning back goods to you from the sales. So that question may come in maybe in different ways. So if you see that the question maybe the next thing say that 15th, let's just say that sold goods on cash, shillings, 50,000 to karaoke. So yes, he's making the sales, but these sales are not on credit, they are on cash basis. So that means the transaction will be recorded to the customer who is buying the goods, that is the karaoke, and the cash account. So that means if a question says that maybe you are given all these choices and we've been told which one of the following cannot be recorded into the day books, and the final is this one, because it is not on credit. So that question can also come in that scenario. So you have to know what are you supposed to record in your journal books. So that is how you can try to do that one. And I have tried to source the source document and the prime books and how the life cycle of the business can go on. So once you finish watching the book and you have done your revision, you can keep on coming and watching again. If you forget, you can come back again and watch it. And please subscribe, like, and share. So that at the end of the day, you pass your exam and you remember me. So those who can get the distinction can get the distinction. Those who want to get awards can get award from CASNEP. And life moves on very well. So for any assistance, you reach me 0711404935. So you can also reach me through that one if any assistance you need for financial accounting. So that we make this financial accounting something that is enjoyable when you are doing it in your exam. And become a good accountant in your future, a good auditor, maybe you can become an auditor, a CEO, and any other thing. So thanks for watching. See you in the next video. So the next video will be talking about the posting into the ledger. So That is where the good accounting is. That is the double entry. How can you do the double entry, and how can you answer the question for the double entry? So thank you very much for your time, and may God bless you to understand financial accounting with my revisions.